Understanding health insurance in the U.S. is crucial to comprehend why it is often referred to as one of the biggest frauds in the country's history. At its core, health insurance is a system designed to cover medical expenses for policyholders, theoretically providing financial security in the face of illness or injury. It involves collecting premiums from the insured, which are pooled to cover the healthcare costs of individuals who require medical attention. However, the U.S. health insurance industry is complex, often leading to debates about its fairness, transparency, and efficiency. The importance of understanding health insurance within the broader discussion of healthcare fraud and exploitation cannot be overstated. Health insurance companies have been criticized for prioritizing profit over patient care, leading to practices like denying claims, inflating costs, and creating convoluted billing systems. For instance, the notorious case of United Health Group in 2017 involved the insurer systematically delaying payments and denying coverage to keep profits high, affecting countless patients who couldn't afford necessary care. Similarly, Aetna faced backlash when it was revealed that one of its medical directors, Alora, never reviewed medical records before denying claims, showcasing the disconnect between patient needs and insurance practices. Supporters of the current system argue that health insurance is essential for risk management and accessing quality health care. However, critics contend that the system enriches insurance companies at the expense of consumers. The controversial debate over the Affordable Care Act is a prime example. While it aimed to expand coverage and reduce costs, opponents argued it led to increased premiums and decreased choice for some. Challenges within the system include navigating the opaque pricing models and negotiating between providers and insurers. Patients often face unexpected bills despite having coverage due to out-of-network charges or denied claims. Alternatives like universal health care or single-payer systems are frequently discussed, but remain polarizing, as they face opposition from stakeholders benefiting from the current structure. Understanding health insurance's role exposes the inherent misalignment between financial incentives and patient welfare, influencing broader discussions on healthcare reform and fraud prevention. It sheds light on why many view it as a deeply flawed system, ripe for manipulation and abuse. By exploring these aspects, we gain insight into the urgency for reform, the complexity of implementing change, and the resistance from vested interests. This contentious interplay not only shapes public opinion, but also affects legislative action and health policy, underscoring the need for informed discourse and action toward a more equitable system. The heading, "The Dark Side of Health Insurance, the Biggest Fraud in U.S. History," suggests a critical examination of fraudulent activities within the health insurance industry. At its core, this heading addresses the deceptive practices that plague the U.S. health insurance system, which can include false claims, exorbitant pricing, and manipulation of coverage benefits, ultimately burdening consumers and the healthcare system. The significance of this fraud lies in its massive financial and ethical implications. Fraudulent activities lead to billions of dollars in unnecessary healthcare expenses each year, driving up premiums and out-of-pocket costs for consumers while diminishing trust in the system. One notable example is the case of Health Management Associates at HMA, which faced allegations for pressuring doctors to admit patients regardless of their medical need, maximizing revenue from Medicare and Medicaid. Another is the case of United Health Group, which settled for $270 million over accusations of overcharging government programs by inflating risk scores of patients. These examples demonstrate the broad scope of fraud and its impact on both public and private sectors. Critics argue that these fraudulent practices exacerbate the already complex and expensive nature of U.S. healthcare, making it inaccessible for many citizens and straining taxpayer resources. Opinions highlight the failure of regulatory bodies to effectively monitor and prevent fraud, as well as the responsibilities of healthcare companies in ensuring ethical practices. However, addressing fraud in health insurance is not without challenges. The deeply entrenched relationships between insurers, providers, and other stakeholders complicate efforts to untangle deceptive practices. Furthermore, there's a debate regarding the appropriate extent of regulation versus market freedom to self-correct. Some stakeholders might argue that increased regulation could stifle innovation and increase costs, while others advocate for stricter oversight and enforcement. This point about fraud not only underscores financial malfeasance, but also influences broader discussions about healthcare reform, transparency, and accountability. It calls into question the effectiveness of current insurance models and sparks dialogue about potential reforms, such as moving towards a single-payer system or implementing more stringent federal oversight. In essence, exploring the dark side of health insurance fraud reveals the systemic issues that pervade the industry, challenges the integrity of healthcare delivery, and calls for significant policy considerations to protect consumers and restore faith in the U.S. healthcare system. Health insurance fraud has a long and troubling history, rooted in the exploitation of a system designed for public welfare. At its core, health insurance fraud occurs when dishonest claims or misrepresentations are made to acquire unwarranted benefits. This deception can transpire through various means, from patients embellishing their medical needs to healthcare providers billing insurers for services never rendered. The significance of understanding the historical background of health insurance fraud is paramount, as it sheds light on systemic weaknesses, highlighting vulnerabilities that have allowed this unethical practice to evolve into a multi-billion-dollar problem. Such knowledge not only unveils the magnitude of the issue, but also acts as a catalyst for reforms aimed at safeguarding the integrity of health insurance systems. Several key examples illustrate how deeply embedded this fraud has become within the U.S. healthcare landscape. One notorious case involved the Columbia HCA healthcare company, which was embroiled in the largest healthcare fraud case in U.S. history at the time. The company was accused of defrauding Medicare, Medicaid, and other federal programs, eventually settling to pay over $1.7 billion. Another example is the case of the healthcare forum owner who orchestrated a complex scheme to defraud Medicare of approximately $375 million by submitting false claims for mental health services. Opinions supporting the crackdown on health insurance fraud emphasize the necessity of maintaining ethical standards and financial solvency within the healthcare system. Experts advocate for robust regulatory frameworks and enhanced technological surveillance to detect fraudulent activity swiftly. These opinions highlight that an unchecked continuation of fraud could lead to rising insurance premiums, placing an even greater financial burden on honest policyholders and straining public resources. However, tackling health insurance fraud is fraught with challenges and controversies. Privacy concerns are often raised in response to increased surveillance and data monitoring, sparking debates over the balance between security and personal freedoms. Additionally, there is a risk of deterring legitimate claims due to overzealous anti-fraud measures, potentially denying patients the care they genuinely need. This exploration of health insurance fraud seamlessly intertwines with other aspects of the topic by underscoring the inherent flaws and ethical dilemmas present within the broader health insurance framework. Addressing historical fraud not only informs current practices, but also propels ongoing discussions on how best to reform and revitalize the American healthcare system. The lessons drawn from past instances of fraud serve as critical touchstones for policymakers and stakeholders committed to fortifying the system against future abuses. The phrase, the dark side of health insurance, the biggest fraud in U.S. history, suggests a critical examination of health insurance practices in the United States, drawing attention to fraudulent activities that might undermine the efficacy and fairness of the system. Health insurance fraud generally refers to deceptive practices conducted for the purpose of obtaining an unauthorized benefit. This could involve anything from patients providing false information, healthcare providers inflating claims, or insurance companies denying legitimate claims to increase profits. The significance of this topic lies in its vast impact on the healthcare system and its participants, including patients, providers, and insurance companies. Fraudulent activities can lead to increased healthcare costs, compromised patient care, and erosion of trust between stakeholders. For instance, patients may face astronomical bills due to fraudulent practices by providers who overbill or perform unnecessary services. Similarly, insurance companies might inflate the costs of plans, making healthcare inaccessible to many. One salient example of health insurance fraud is the case of Dr. Fareed Fatah, a Michigan oncologist, who was sentenced for administering unnecessary chemotherapy to patients who were either in remission or did not have cancer at all, reaping millions in fraudulent claims. Another high-profile case involves health management associates, which allegedly pressured doctors to admit patients to hospitals regardless of medical necessity to boost revenues, violating the trust of patients and the ethical standards of medical practice. Opinions supporting the crackdown on health insurance fraud argue that stringent regulations and transparency and accountability are crucial to maintaining an equitable system. Supporters call for tighter oversight and more rigorous prosecution of fraudulent activities to protect patients and reduce overall healthcare costs. However, the issue is fraught with challenges and controversies. Detractors of stringent regulations argue that increased oversight may lead to higher administrative costs and slow down legitimate claims processing. There exists a balance between preventing fraud and ensuring that honest claims are not hindered. The concept of health insurance fraud connects deeply with the larger discourse on healthcare reform and accessibility in the U.S. It highlights the need for a comprehensive approach in addressing inefficiencies within the healthcare system that are exacerbated by fraudulent acts. The fight against fraud is also a fight to ensure that healthcare can be affordable and accessible to all without being preyed upon by unethical practices. Addressing fraud is crucial in restoring confidence in health insurance, particularly in light of ongoing debates about healthcare costs and reform in the U.S.